Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we talk today on Thursday, let's recap what happened in the shortened trading week.
Yeah, if we start on the cattle side, live fed cattle prices were up this week, up nearly $1.50, while on the feeder cattle side, as we kind of look here on a Thursday, up to $1 to $2 this week. So strength on that front as well. On the futures side, the June live cattle futures contract closed up a little more than $1 this week, while the May feeder cattle futures contract closed up a little more than $1.25 for the week. On the beef side of the equation, the choice box beef price was up nearly $3.50 this week, really led on strength by ribs and loins. On the hog side, we continue to see cash hog prices pushing higher again this week, up $2.50 on the week, while that May lean hog futures contract closed up about 75 cents this week. The pork cutout value also gained this week, up nearly $3. Ribs and bellies kind of led the way on the pork cutout value. It's a very interesting where we sit in terms of those wholesale values for both beef and pork. On the beef side, we're up $20 this year relative to where we were a year ago at this time, and on the pork side, up nearly $19. So a lot of strength in that wholesale beef and pork complex the last few weeks.
I have to say we've been talking a lot about markets are going to be pretty volatile, especially as we take a look at this China news and how things kind of ebb and flow with what goes on there. This week was no exception to see how one day we saw lower prices, the next day we saw higher prices. And is that just kind of our pattern for the not so distant or the future for us for a while?
It sure seems like it. I mean, I think everybody continues to ask questions about what's really going on in China and how bad will it be and how much will pork supplies be cut, how much will they import. All of that's, I think, factored into a lot of volatility that we've seen in these markets, and I don't see that going away anytime soon. Although maybe we're learning a little more news about what's going on with African swine fever in China, I think there's still a lot of unknowns at this point and how it really affects markets. So we're going to see some really good periods, and we might see periods where we retrace those steps a little bit as well.
All right, let's talk a little cattle on feed report. That's kind of the big news of the week as we take a look at those. Are we surprised to see the numbers come out where they did?
Yeah, so not really surprised in terms of what we got in terms of cattle on feed this month. We are up. When you look at cattle placed in March, came in at 104.8. That's about a percentage point higher than the midpoint of the pre-report estimates. So coming in about where we would have anticipated pre-report. On feed, still continuing to climb, came in at 102, so up 2% relative to a year ago. That's very near where that pre-report estimate would have came in. So from a number standpoint, we aren't seeing any surprises in terms of lower numbers or higher numbers at this point, I guess.
Let's talk a little bit more about that cattle on feed report. Specifically, as we take a look at the number of heifers on feed, as we talk about that, where does that indicate for us long-term about expansion or growth in the cattle industry, or have we maybe slowed down a little bit?
Yeah, so we've now seen, I think, 3 consecutive quarters of about 38% of the on-feed inventory being heifers. If you look at that historically, that's about the level that keeps us fairly flat in terms of not much impetus to grow or reduce the cow inventory when you look at that percentage. So maybe we've seen a little more stability after, just remind us, back in very early 2015, we were all the way down to 31% of the on-feed numbers were heifers. So 7% increase from that low certainly suggests to me that the incentive to grow the herd's a lot less, given the current numbers that we see. So perhaps that still sets us up for January 1 of 2020 that's flat to perhaps even down a little bit, depending on how the rest of this year unfolds.
I want to talk a little bit, too, about the winter weather that we had. Are we starting to see some of the impacts of that reflected into these numbers as well?
I think so. We certainly had a tough winter in a lot of respects. We went into that winter with less than ample supplies of hay. So the interest for folks to try to grow those cow herds maybe was less than otherwise would be the case. Then we ended up with a lot of mud at different points in time, and I think we have pastures with a slow start that need a lot of renovation that has hurt things. And really, I think you're going to find folks that are very, very low on hay supplies at this point in time. And so the interest in growing under that kind of scenario probably wasn't very great. I remind us a really good summer where we put a lot of hay up might change that a little bit as well as we get late in the year. We'll have to wait and see. But I think weather played a role in what we've seen as a lot more stability in cow numbers at this point.
All right, let's talk a little monthly trade data. Really kind of not a positive month of numbers.
Yep. So we certainly have been on a long road of positive, but now we're kind of back on this where things not quite as bright. If we start on the pork side of the equation, pork export volume for February of this year was down 9%, while in value terms we dropped 17%. I guess, it's good to remind us that Mexico matters in this scenario. When you look at the numbers for Mexico, we were down substantially, down 13% in terms of quantity of exports to Mexico. On the value side, down 32%. So those numbers really tend to jump out at us. Now we have this conversation for February when we probably know that we're going to start to see some positive numbers come March and April data that we get eventually, as potentially ASF and China and their imports of U.S. pork might start increasing. So don't want to be too negative, but that certainly wasn't the kind of way we wanted to end a February report. And even on the beef side, February beef exports down 6%. We also lost a little bit in value. That's the smallest beef export volume since February of 2017. So it's been a while since we've been at this kind of level. I guess when we look on that side, it's really Hong Kong and Canada that were the ones that were showing most of the decline that ended up affecting the total.
I think as we talk about monthly trade data, that segues into trade talks and what's going on. We saw some progress with China this week. It sounds like we're getting closer and closer to a deal there. USMCA. And I think another one that really is impactful and important to the livestock side of things is Japan. And Nick Giordano with the National Pork Producers Council late last week or early this week made the comment that they can't get a deal with Japan fast enough. As we take a look at those, how important is it to keep us afloat and to keep prices supported to get those three deals signed, sealed, and delivered?
So all three of those are going to be potentially really big movers for us. We don't want to forget, and I keep reminding us, so this trade boom, if you will, or growth that we've seen, it can't stop. We're in this constant, we need to continue to talk about expanding trade out of the United States. If we just take Japan for a minute, so number one, on the pork side, it's important from the way that gate price mechanism works to get a better deal. I think we certainly could talk about more pork going to Japan. Maybe a little easier to talk about from a beef perspective. So if you look at chilled beef today, going from the U.S. to Japan, we face a roughly 38.5% tariff on that product. Those countries that continue to stay in the old TPP, so the CPTPP agreement, now face a 26.6% tariff. So think about Australian beef going to Japan at roughly a 12% lower tariff than what we face today. And that's going to continue to shrink. But that creates some interesting competitive disadvantages for us here in the United States. So that agreement, of course, new agreement could certainly be helpful. USMCA, I will say, you look to the South and cattle and pork both are in a situation where getting a successful USMCA, getting rid of tariffs on things like hams could really be important and move product exports higher. And of course, China, but a successful agreement there. I still wonder if a successful agreement doesn't suggest even a larger purchase of U.S. pork as they deal with some of those disease issues in China. So all three of those could make us in a very different situation. And just to keep this all in perspective, I mean, you think about where we started the year in pork markets and where we've gotten to today. It's been a phenomenal shift. And so we went from markets being concerned about a 3 to 4% increase in pork production this year to the markets being focused on trade almost exclusively as a result of ASF in China.
And really getting rid of those tariffs and putting beef and pork on a level playing field in all of those countries, it seems like it's going to be a game changer for profitability for producers and could maybe trigger even expansion again.
Yeah, so I think you look at the hog side and you go, all of a sudden, what might have the first month or two suggested we were going to stop expansion to now, probably I have a hunch producers are looking at each other going, now what do I do in what is a black ink situation? You know, we saw those Iowa State returns last week turning to the positive side. I think that'll continue, and so we can actually get a little expansion. I'm not completely calling out a question that, you know, if cattle prices were to move higher as we get through the year with some positives on the trade side, we couldn't grow the cow herd. I think the combination of maybe better prices and better weather could certainly change what we say, because we've kind of been in this mode the last several months where production increases have been less than we might have anticipated. I think weather played a role, prices played a role, but we could find ourselves late in the year flip back to the other side of that scenario where production may be growing a little faster than we anticipated. But we'll have to wait and see. But it's an interesting time to be trying to figure out livestock markets in both cattle and hogs.
Plenty for us to talk about then, right?
Yeah, absolutely.
All right, Scott, reports for next week. What are we looking at?
So we'll get cold storage early next week, and then we'll finish on Thursday with livestock slaughter.
Sounds great. We will talk to you then. Have a great weekend.
You do the same, Megan.
Cover Weekly Livestock Market Update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.